Very good afternoon, everyone.
Welcome.
Thank you. And thanks for our introductions. And, as you all know, decarbonization, EV has been sort of the flavor of the season for a fairly long time. And, as we talk about India, I think there's a lot of work that is underway in this regard, and a multitude of solutions are being talked about or have been deployed, and all of them need investments. Hence, this panel discussion today. We see to facilitate investments, there have been policies that have been in place. For example, there's the FAME policy, PLI scheme, multiple state-level policies, etc. also. At the same time, there's also this talk about having a rotation away from China. So a China +1 policy, which means that India needs to do things so as to attract more and more people to come and invest within the country, given the large market that we have, the kind of abundance of skill sets that we have, and the strong manufacturing ecosystem that we've had over the years. Right. And therefore, to talk about all of these things on how we will be able to meet these investments in the future, which are estimated to almost triple by the year 2030 to about $20 to $22 billion in the EV space alone. I think we have an august gathering of speakers here. And to begin the discussion, I would first of all go across to you, Aishwarya, to understand your perspective on one thing. Say, when we talk about the ICE vehicles, and we've heard it over the years, India has an under... I thought once before you respond, you could do that. Okay, sure. So, like when we used to talk about the ICE vehicles, we always used to say that it's an under-penetrated market in India as compared to, rest of the world, and therefore, most people would want to come here because we were in a growth stage. But when we look at EVs, I think across the globe, we see it's a similar kind of pattern. Even the developed markets are still, in the initial growth stages. So given all of this, what do we do differently as a country so as to bring in more and more investments when everybody's sort of starting at the same sort of start point?
Thanks, Ashim. First and foremost, thanks for having me. My name is Aishwarya Kachhal. I work with the World Bank Group. And thanks, ET, for putting this awesome thing together. And this certainly moves the needle for the sector. Back to your question, Ashim. I think, what people forget that India is a large country. And when you talk percentages, you forget the absolute numbers. And my friends in consulting tell me that the size of our automobile sector is probably larger than the size of the automobile sector in Germany. And I guess that answers the percentage debate. And maybe what I would also like to point out, before I get into the specifics of your answers, is the importance of this sector to our economy. So automobile constitutes something like 7.5% to the GDP. And fuel for automotive contributes another 3.6. So we are talking of a double-digit GDP contribution in a large, in the fourth or the fifth largest economy in the world, and which probably will be the third largest economy in the world. So status quo, business as usual, life is not going to be bad. But this 10% GDP is changing. And, and this 10% GDP is the flow, aggregated over a bunch of years, and you will get a very, very large number. That's the kind of change that's happening. Specifically, we are doing a bunch of things differently. And a few success stories, if you look at buses, the way CESL, with the support of the World Bank, has aggregated buses, that success story will be replicated across the world. I can tell you that CESL has seeded the bus market in India. And when you seed a large form factor like buses, you're seeding batteries, and which will have a ripple effect on the other sectors. And let's look at, the other success stories in the country. So two-wheelers is a success story in the country, and we are at 4.5 last time, or maybe close to 5 now, percentage of incremental sales, which is the magic number when the S-curve starts clicking in. And this has completely happened on a, let's say, a consumer-driven phenomena, very let's say, strongly supported by our regulators. So nowhere in the world will you will see both subsidies come into play, and subsidies come into play plus state-wise registrations have been made so lenient for electric vehicles. That's point number 2. If you look at, the other form factors, which is three-wheelers. So three-wheelers, the story that nobody talks about is the e-rickshaw story in India. There are roughly 2 million e-rickshaws in the country, and they have existed. They provide a very valuable extension to our public transport system. So they've been around, they are moving to lithium-ion batteries, they are moving to tech. And if you go around in the city of New Delhi, you will start seeing those blue autos. And they are because, an open permit has been granted by the regulator in Delhi. Trucking is the next big thing that's being spoken about. The highwayman's picture is right outside. I guess if he was here yesterday, he would have certainly spoken about how trucking is changing. What lags behind is probably cars and something that gets the most eyeballs. And I guess that's a question of the right products coming out. And if you sum all these things that I speak about, I think we are probably one of the leaders in electric mobility. It's just that, the lead in electric mobility, our route has been different. So US adopted a Tesla-led, features-led, cars-led model, and that probably became the script for the Western world. For us, it is the common man, whether she or he moves in a bus or a two-wheeler or a three-wheeler, that's driving this forward.
Thank you, Aishwarya, for that, sharing that optimistic view about the sector, and also how our EV mobility journey is sort of more about democratizing mobility than just going out to cars. So thanks for sharing your perspective. Moving on to you, Sheetal. I know we almost at the end of winter if you look at the sun outside, but we do hear about a funding winter that's going on these days, right? And in addition, we also hear about, sometimes large part of the funds, same being cornered by some startups that are large and then get larger and larger, inadvertently kind of blocking out the smaller ones. In the light of these two things, what do you think is the outlook from the investor side for in the immediate future for the e-mobility sector in the country? Is your perspective on that?
Okay. Thanks, Ashim. Okay, so first I'm going to ask a question, and everybody has to, you can't be non-committal, okay? You have to raise your hand and answer honestly. So when they announced, and 4 of us came on stage, how many of you wondered where are the 2 women, Aishwarya and Sheetal? Did anybody wonder that? So we both, I was delighted to meet Aishwarya because, I get a sense of schadenfreude here. I've suffered all my life with this. So when somebody else suffers, I enjoy that. Your namesake was a Miss World at least. Oh, so Sheetal Malar was a great model too. Anyway, I'll quickly introduce myself. So I'm a partner at GrowX Ventures and Merak Ventures. GrowX Ventures was my first fund, Merak Ventures my second fund. We are a seed stage, B2B and emerging technologies focused fund. We have enough from a first fund we've invested. We were probably amongst the earliest investors in the EV space in India. In 2019, we invested in 2 companies. One was a company called Race Energy. Race Energy is setting up a battery swapping infrastructure for 3-wheelers and 2-wheelers, starting with auto rickshaws. And the other is Cell Propulsion, which is in the electric light commercial vehicle space. We also, got into the space when it was very, very early, and we actually thought at that point there wasn't even enough happening in EV. So we, for the first time in our fund, set up a dedicated accelerator for it, ran the accelerator program, so about 120, 130 companies, then selected 2, funded them, and then progressed. Which also just brings me, I'll dovetail that into where we are currently on our mobility space. So we are sector agnostic at a fund level, but we chase themes from time to time, which depend on macro conditions as well as where we are in our fund. So one of our largest themes right now is climate tech, but climate tech is all encompassing. So we have 5 sectors under this, one of which is mobility. We also, because we think climate tech is really nascent in India and we wanted to just help create the whole ecosystem, about 3 months ago we launched an accelerator called Climact in partnership with a accelerator called Huddle and with most of the later stage funds backing us, so all the Axel Sequoias, Matrix, Nexus, etc. That program is going to come to fruition in the next month or so. We're down to our 40 applications and then go through them. So again, there are going to be mobility companies out of that. I was just setting context for what my connection with the entire mobility sector is. Let's start with this funding winter term, right? I think this funding winter term is completely overhyped. Maybe some of you guys are entrepreneurs here, maybe some of you have suffered here, but this funding winter, 2022 is not the aberration. 2021 was the aberration, where money was being thrown indiscriminately. There was bad behavior all around, from investors as well as from entrepreneurs, and the 2021 cohort is going to suffer. And how in 2023? Some of them are going to, giants are going to fall, some of the unicorns are going to become horses, and some of them will just become zombies. So I think right now it's norms, right? Right now what we are is in a normal sort of environment. So funding is still happening, at least at the seed stages, which are the stages we operate at. I think later stages are a little bit more circumspect, but if you're just about starting out, and here are 2 reasons why, I'll just leave you with this. One is all funds have a natural life cycle, right? I run an 8-year fund. There are many funds most funds run between 8 and 12-year kind of funds, right? So once they've raised money, they have to deploy it in the first 4 or 5 years. Between the top 10 funds in India since 2021, over $6 billion has been raised. They don't have a choice but to deploy this. So funding is available. 2, funding is getting a little bit more concentrated in the sense that now, because people are saying, hey, I don't want to invest in all the companies who don't care about unit economics, who are just pursuing growth indiscriminately, etc. So the money that's left actually is more widely available for the good companies, people who are creating more sustainable, profitable businesses, etc. So there's actually, I think, more money available if you're like a solid company. So that's just my reaction to funding winter, because everybody talks about it a lot. It's a bandy term, and I think it's a little overhyped. Otherwise, what's happening on the EV investor ecosystem is there's some good news and there's some bad news. So, on the seed stage, I think lots of people are taking chances. We are taking chances. There are a whole bunch of other funds. There's a dedicated EV fund called Micelio, and newer funds are coming to the country. What's been unfortunate is that early growth investors, the Series A, B, C kind of investors, they've just for reasons I can't understand, been sitting on the sidelines, right? When you talk to all of them, they all say EVs are inevitable, but that we can't seem to find a business model for it and what we want to invest in. Basically, they're sort of unsure. It would be great if they showed a little bit more gumption, I think, around this. So most of the later stage investing that you're seeing happening in India is happening from either strategic investors, people like OEMs or auto component manufacturers, or from DFIs, or it's happening from VC investors who invested in similar models outside the country and are coming to India. And most recently, we've even seen sovereign funds like GIC jump into the fray. So that's what's happening on the later stage part. My suspicion is that 2023 will see a lot more pickup, because in 2022 there were larger rounds of funding which happened. Ashim referred to the point that there's some concentration of funding still happening, which is that a handful of companies are taking a lot of the funding, which has been true. I suspect that will continue to change. So if you're an entrepreneur who's going to think of jumping in, I would say jump in. If you're invested in it already, I would say stay in. That's my 2 cents. Ashim, did I miss some specific questions of yours?
No, I think you covered it all. Thank you very much for that, Sheetal. And also, pointing out that life is always relative. So when we are looking at 2021, we think it's a winter. But if you look at 2022, maybe it's not. And also how probably this is also like a correction that's happening in the system, and the funds going to the really right set of companies there. Right. Moving on to you, Nitin, and you're dealing with one very crucial aspect where in the EV ecosystem, where as a country we do not have, possibly a solution underneath the crust, which is raw materials, right? And as we move in this journey forward, so that we don't replace our dependency on oil to dependency on raw materials, urban mining or battery recycling is becoming extremely important, right? So given that you are already in the space, what do you think needs to be done by all the stakeholders out there so that this ecosystem for recycling is set up and well running even before we get a large chunk of batteries out there ready for recycling?
Sure. Well, thank you, Ashish, and thank you for inviting us. And like Aishwarya said, great event by ET Auto. Appreciate the effort they've made. So very small marketing plug about Attero. We are not as well known as the World Bank guys, hopefully one day. So my name is Nitin Gupta. I'm the co-founder at Attero. We are a deep tech company with a very strong focus on sustainability. And just to sort of re-emphasize both those points, as a company, we have 34 granted global patents on recycling technology developed by us in India. And the patents are all across the world, US, Europe, parts of Asia, including China, Singapore, India, Japan, you name it, right? We're also the only recycling company operating in the lithium and battery recycling space and the EVA space to get carbon credits per ton of waste recycled. And that is because of the energy consumption in our process to extract, let's say, 1 ton of copper or 1 ton of cobalt or 1 kilogram of gold is significantly lower than the amount of energy involved to extract the same amount of metal from either a virgin mine or any other secondary source of that material, right? Specifically coming back to battery recycling, so lithium and battery recycling, there are sort of two aspects to this from a sort of a regulator and a market perspective. First is, as an example, as the batteries are becoming more and more ubiquitous, the first problem that we face is there will be a large amount of end-of-life lithium-ion battery waste which is hazardous in nature and needs to be recycled in an environmentally friendly manner. The second and not so obvious issue is at least 50% of the cost of an EV is the cost of a battery, out of which at today's metal pricing, at least 45% or more is the cost of metals that make up the battery, which include cobalt, lithium, nickel, graphite, right? Each of these critical battery materials has significant ESG issues, which is environmental social issues, and supply security issues. Take cobalt as a case in point. More than 70% of the world's cobalt is actually mined in Congo, which is driven by child labor, terrorist regimes, what have you. And at the current known sources of cobalt and current utilization rates, we'll run out of cobalt by 2030. Similarly for lithium, more than 60% of the world's lithium is mined in the Bolivia, Argentina region, which is, by the way, also considered the world's driest region. Reason is that traditional lithium mining is a water guzzling process. And to give you some context there, to extract 1 ton of lithium using a traditional lithium mining process requires more than 500,000 gallons of water. And you can imagine the social and the ecological impact of so much water consumption, right? So battery recycling is not only required from an environmental perspective or part of the clean tech theme that's going on from a funding perspective, but it is absolutely needed to make sure the supply chain is existing and is compliant, okay? Coming back to the regulator point of view, Ashish, that you asked, so there is enough and more market about battery recycling, right? From a regulation perspective, if you look around the world, so the US has come out with an IRA Act, which is an Inflation Reduction Act, which basically says that the EV automakers will get a subsidy if they can domesticate the supply chain of EV in the US, right? So that's one bit of a regulator action that's going on across the world. That's actually driven a lot of investments in the EV supply chain in the US. If you look at Europe, what Europe has said, they've actually mandated that any batteries sold in Europe will have a certain minimum amount of recycled content. So starting from 5% of recycled cobalt this year, going up to 70% of recycled cobalt till 2030. That's driving another circular economy and the entire battery recycling industry. Within India, there's a lot of conversations happening both on EPR in lithium and battery recycling as well as circularity in lithium and battery recycling, and club that with probably a PLI policy for battery recycling as well. So I think from our vantage point, it's a great industry to be in, one that is required by the world in general and more so by India. We don't want to be dependent, coming back to the China Plus policy, Ashish, we don't want to replace Saudi Arabia with China, where we're importing oil earlier because the EV revolution, now we're importing all kinds of battery packs.
Thank you, Nitin. I think one thing that you really pointed towards is in our quest for net zero. I think we also need to look at the life cycle emissions. As you rightly pointed out, the kind of emissions and that happen, and also the SDG goals and how they get impacted during the mining process. And therefore, I think very pertinent points out there for developing the ecosystem for battery recycling in the country. Yeah. Coming back to you, Aishwarya, on another topic which is sort of very much top of the mind in this ecosystem. mechanism, and given that you have a background in that as well, is around cell manufacturing, right? Where we have the PLI scheme, there've been announcement, but still, it's still in the initial stages. Not as much has happened so far. So if you could shed some light on what could be done there, and maybe even if World Bank is looking at that. And second aspect around also the funding of the EVs, which again, we have talks about priority sector lending, etc., but still people don't know the residual value and hence are sometimes apprehensive when it comes to funding. So 2 questions, club, to you.
There's a lot of questions actually out there. So let me answer the simple one first.
Sure.
Vivek out there is laughing. See, we need batteries. That's without a doubt. What's happening is we haven't reached that critical stage where it starts making sense for a private player to start manufacturing batteries in India. And I don't have a number for it, but my friends in consulting tell me that the magic number is 5 gigawatts, where you start looking at 10% savings both on a capex number and on an opex number. And that's probably the minimum efficient scale. And we're still a few years away from that. And the way we have thought through this as an economy is that the government has tried to incentivize manufacturing through a PLI mechanism and a localization content mandate. We've 5 players have come up with plans, and PLI schemes have been approved. Amongst the existing players, Excite Next Charge is probably the first capacity that will come up. And I guess this is the way that the route that our country is adopting. This is best left to private players if this industry has to sustain and really grow. For somebody to put in that kind of a money, they have to see an assurance of demand. And if you were to believe the press, ET and everybody, I guess 2 large OEMs are already talking about setting up a joint facility. I won't go there, but that's what's happening on the battery side when it comes to funding. Typically a private sector route with some incentives from government. On the funding, I guess it's more complex, and each asset class presents, when I say asset class, I mean 2-wheelers, 3-wheelers, 4-wheelers, presents its own unique challenges. When it comes to 2-wheelers and 3-wheelers, bulk of the existing underwriting is on the residual value. You are right. And that's because 65% of the customers who buy a 2-wheeler are new to credit customers. And if you add thin file to it, probably the number would be 80%. So an underwriter has nothing to take a call on except for the residual value of the vehicle. With EVs, batteries are a black hole. So nobody, you are scared that a particular part is 40%, it can be taken out and can be put to other uses. B, you are scared that there is no afterlife. How do you determine what is the life left in the battery? C, you are scared that there is no secondary market today. So there are a lot of puzzles that have to be solved. But guess what? The market tells you that 5% of incremental sales are EV sales. So people are getting that comfort. And a couple of years back when we had done a study, we were told that 5% or 6% or less than 10% of electric 2-wheelers were getting financed. Now, as I cross-check with my friends in the finance industry, the numbers is close to 28-32%. So the market has figured its way out. More can be done. The more OEMs give visibility and transparency around the black hole called batteries, that, hey, this is the state of the health of the battery. This is what the batteries can fetch. Couple of OEMs are doing it, and my request to everybody who's there as an OEM, including MTA, is give the market, give the financier the visibility of residual value around batteries. And I think once that's solved for, that takes into account for both 2-wheelers and 3-wheelers. 2-wheelers, the risk is high. People, my finances friends would hate me for saying this, but the return on assets is clearly above 3.5, which very well makes up for the risk that you are taking over. The question gets, cars is easy because essentially, let's say the financier is not taking a call on your vehicle, he's taking a call on your CIBIL score, your credit worthiness, and your motivation to keep your credit score above a certain limit. Buses, it slightly gets tricky, and again a different complexity. Both buses and trucks are the market. The challenge that we face as a market is the typical owner of a bus or a truck is a very small entity. People who are aggregating demand, they want to do, let's say, an asset light model where a return on capital is high so that people like Sheetal can fund them. The question really is the small, medium size operator. For trucks, the number is close to 80% of truckers in this country own less than 5 trucks. And imagine a situation where a truck comes into being where it is, let's say, makes sense on a TCO or an economic basis, but let's say it costs 3x. So their balance sheet allows them to buy only a fraction of what they have earlier, and that means the revenue pie will shrink. And what's the solution to this one? The solution to this one is longer tenured loans. The solution to this one, the big solution is leasing. And I definitely see leasing as an asset class take off for electric vehicles. That's probably the short answer of it.
Sure. Thank you very much, Aishwarya, for laying it out very clearly across the vehicle segments and also on the cell manufacturing part of it. Sticking to sort of the other components theme and coming across to you, Sheetal. So if we look at the investments that have come in for areas like power electronics, battery thermal management systems, and also to some extent, say the BMS, the battery management systems, we see they're not been as high as, say, what would have come in terms of vehicles or even in some parts of the charging infrastructure, right? But when we look at, say, localizing and developing the competencies for the EV industry, all of these are very important cogs of the wheel that we need to also localize, So how do you think this could be changed in future? Or is it like looking for another set of investors who should come in and would fund these, or something that needs to be done differently at, say, a policy or a stakeholder level to attract investments in some of these areas as well?
The short answer to that is that investors need to stop being wimps and man up. Because most of them don't want to do any work at all, don't want to study, just want to sit there and make easy and bet on simple things like 10-minute deliveries, which don't solve anybody's problem in the world, but not actually do the hard work of understanding what happens, for example, in power electronics or BMS, etc. You'd be surprised how many companies there are in India doing this stuff, right? I think every week I receive a pitch in which some startup is telling me that they have the most advanced battery technology in the world right now, or the most advanced BMS in the world. So there's actually, the one problem there is, and this is a genuine problem, even when you're not being wimpy, is it's really difficult to distinguish because there's so many people are saying exactly the same thing right now that unless you actually go down to their labs and start seeing their test results or run tests yourself, it's a little difficult to distinguish. So that's been a little bit of an issue with seed stage investors. But seed stage investors still have taken enough bets. What's just not happened is the fact that, like I said earlier, mainstream investors, coming in and taking larger bets. If they did some positive signaling, I think you'd see a lot more. And this localization part that you talked about, I think it's absolutely imperative. I think the reason you see all these EV fires and many of the EV problems that you're seeing is because people are taking these cheaper products from outside the country and applying them to Indian conditions where we see extremes of heat, cold, pollutions, potholes, start-stops, all sorts of issues, right? And these batteries genuinely need to be customized to Indian conditions. So all this stuff needs to be done, a lot of it needs to be done indigenously, for sure. The only thing I can suggest on this is that one is, like I said, later stage investors jumping into the fray. Two is, if there is a way for government or other institutions to create small funds which help companies go from lab maybe to or lab or prototype to a pilot, right? I think once you've sort of got to the pilot stage, then it's a little easier to get funding. Does that answer your question? Who wants to add something?
Yes, please.
Maybe the first thing that I like to point out that not all investors are wimps. The gentleman sitting on my right is a beneficiary of World Bank Group funding. IFC put in money fairly early into his company, and that's the World Bank Group is IFC, World Bank, and a couple of other entities, and I work across World Bank and IFC. So we walked our talk, and we did. When did we make that investment? Few years ago. And I also sit on the investment committee of the seed fund at IIT Delhi, and we incubated a company, no names there, Tiger came in as a follow-on investment, and that's probably one of the first pre-series A investment that Tiger has ever made. And I guess we all know of names, what's happening in the battery space. A company has hit a $250 million kind of a valuation number. Another company in the same space, and these are smart batteries and adaptive charging space. They have raised significant capital, at least higher than 25 odd mil. GIC invested, and ADB invested in another OEM. So that's certainly happening. And while investors, so there is a particular kind of business models where VCs are not making returns, and we could get into a separate session on that one, because to throw out the incumbents, I'll just give you one data points. The largest OEM, two-wheeler OEM in this country spends 3,000 crores or 3,200 crores as SG&A, and I'm not talking production, I'm just talking market making numbers. Build that over a period of 15 odd years. So this is the kind of stock that they have created. To move this stock, you not only need a Series A, you not only need a Series B, you need a Series D, Series E, and F. And that ecosystem is underdeveloped in this country. On the last point in the government scheme, Sheetal, you should come down to IIT Delhi someday. Department of Science, Merak, money is not a challenge for the first check-in. There are many schemes that are under works. If you have a great idea, particularly on things that move the country forward, I am sure there's so many schemes, DST scheme, and you'll be surprised that there are entities like Merak which are taking direct equity, and the exposure that they can take is around 1.5 crore. So there is significant money coming at very early stage. There is DST money available from getting it out of the lab into some sort of a pilot or an MVP. So that certainly happened.
Sure. Thanks, Aishwarya, and thanks, Sheetal.
This is the perspective of a guy who works in this huge, humongous, Byzantine organization and doesn't realize how difficult it is for the first entrepreneur to get money out of Merak.
I've been
entrepreneur himself.
I've been an entrepreneur for 4 years in this space, and I must tell you, Sheetal did not write me a check. So, so that said that, but having said that, I have sat on n number of investment committees of Merak. I guess the idea is right, the entrepreneur is committed, there is money available.
Yeah, and I think just to add to that, I think the point that Sheetal made, I think very pertinent, that the investor needs to study that in detail, understand, and then make the investment. And because it seems complicated, sometimes money flows into what seems more obvious or easier to understand, and that's very important. Yeah, right. True. Coming across to you, Nitin, sticking on the same recycling theme, we also understand, the tech play out there in the sense that we know the chemistries are changing, and they are going to change as you move forward. So today, say you invest in recycling for a particular chemistry, and that undergoes a complete change. So how do you de-risk your investment in that sense? And also on the technology angle, what role do you see for technologies like blockchain coming in there so as to create, like that signature for the battery, how it's moving, and therefore also add to the residual value in terms of the second life?
Sure. No, thanks a lot, Ashish. So a couple of things there. First, tech is extremely critical to a very successful and let's say commercial successful recycling operation. And battery recycling is not new from that perspective, right? So just on that bit about funding, which Sheetal and Aishwarya were also discussing, in the last 12 months, close to around $4 billion equity dollars have been invested in lithium-ion battery recycling globally. Okay, not 1 cent of that has come to India, but it will. It's just a matter of time that will happen. Okay, so there's significant amount of investor interest in this space because the macro is right. right? Now, if you can create the right business model with the right technology, not only it's a sustainable business model, but it's great from a country and investment perspective as well. Specifically from a technology standpoint, there are two different aspects to this, right? First is within lithium and battery itself, there are various battery chemistries. At the bottom end, there is an LFP battery chemistry, which is a market of its own. The market is defined by asset class, to use Aishwarya's terminology. The market is defined by regions, so to say, right? Then there is various kind of LCO, NMC, LTO batteries, you name it, right? So which technology would finally win is a very, very difficult question to answer. And I don't have a crystal ball to say what will happen. The direction where things are moving towards, there'll be an interplay or a coexistence of both various NMC chemistry batteries and LFP batteries, right? And especially so in various other geographies as well. Beyond lithium ion, from a tech perspective, there are a lot of other things that are happening. How can we reduce the cobalt content? How can we reduce, let's say, the graphite content and make the batteries more and more sustainable, have more energy density and lower cost? So LFP is not the answer, but there are various other chemistries being worked out, whether it is various metal layer batteries to reduce the inflammability of these batteries. People are talking about solid state, right? The electrolyte is the one that catches fire the most. So a lot of things are happening on the tech side of batteries, and it's a sort of a space in a play that's still seen to be seen who's going to win that. From a recycling angle, the beauty is that as a recycler, our technology is fairly agnostic to battery chemistry. Today in India, we are recycling all kinds of battery chemistry, whether it is LFP, whether it's LCO, whether it's various NMCs, whether it's LTO, and we're recovering pure battery grade cobalt, pure battery grade lithium carbonate, pure battery grade graphite, and doing it at an extraction efficiency which is highest in the world, right? Coming back to what Sheetal said, everybody talks the same marketing message, but very difficult to figure that out. But in this particular case, we don't have to take a bet on recycling technology per se. What we have done is we made sure that the tech is so flexible and agnostic that we are sort of market independent from that perspective. Blockchain and sort of more informational sort of tools are pretty useful from a battery passport angle, okay? Battery passport is a concept which basically feeds into circularity. How do you enable circularity when you don't know where the battery is ending up at? And a blockchain technology or blockchain-based methodology can enable you to track the battery and make sure it's either recycled properly and the output of it goes back into either creating a new battery or second life. And even after second life, you probably need to recycle it. So blockchain is definitely useful. Models of that have not been successful as yet, but time will change.
Sure, thank you, Nitin. So I think we're almost out of time, but I think, thanks a lot, Aishwarya and Sheetal, for pointing out the various nuances of funding, how more of it could be attracted, how there is still no funding winter, how India still continues to be very attractive, especially in the EV space. And Nitin, you being a beneficiary of the funding, I think a live example of if the funding comes in, what sort of greater good can be created. So thanks a lot for sharing your perspectives also, and I'd like to thank the audience for also hearing us patiently, and hope you benefited from the discussion. Thank you very much.